Welcome to Java, and thank you kindly for joining. It's October 21st, 2025. It's Tuesday. We are kind of at a bit of a quiet day, although we're beginning to see the volatility. We've got quite a bit of turmoil, I believe, ahead with some of the events that are looking forward to. Now, we are early. What I mean by this is we understand that this kind of thing has been in the works for some time, and hopefully many of you are prepared for this. If you're new here, stick with us. We'll help you in getting through this. So we are on day 21 of the government shutdown, although yesterday they're saying that it could possibly end this week. This did send the markets into a bit of a rally yesterday into the close. So let's get started, as always, with what's going on in the markets at this moment. We've got the fear grade meters at 30, so recovered a bit, but still a lot of fear in this market. It is very volatile at the moment. The VIX has risen again a little bit. So we've got the 10-year yield below 4%. So it's repressed. This is going down. They are going to be cutting rates. They're going to be suppressing this. However, at the moment, it is showing a bit of strength. Now, the other key point is the relative strength of the US dollar is increasing. So, as this Dixie strength of the dollar gets stronger, it makes prices and assets go down. So we are expecting cryptocurrencies dropping a little bit. Bitcoin just below 108,000. So making your asset prices cheaper as that one metric is stronger at the moment and stressing at the moment. So we've got the futures in the market also looking a bit weak. We've got the metals are taking a hit at the moment. So they were due for a pullback. We were talking about that. Crude oil is fairly suppressed. So having a little strength this morning, but really not anything significant that's going to stay unless there is movement with the war sector. So stock market right now highly volatile, is going back and forth. Futures are showing a bit of weakness. So our daily driver is still the United States government between the negotiations, what they are looking at, and what they're potentially going to announce. One tweet on Truth Social is going to upend this. So we do have confirmed that President Xi Jinping from China and Trump will be meeting next week on the 31st. Now, this did rally the market a bit. There's a lot of posturing for this prior to it, and we'll talk about a few of those. So, I do want to say cryptocurrencies right now, they are generally a bit of a leading indicator now for the stock market because they do also kind of indicate a lot in the tech sector, in which the stock market is very heavy in right now. So, we've got Bitcoin saying that it flushed 30% of the leveraged positions in the last market downturn. Now, the problem with this is when they're creating these options, they're putting it out there and publicly advertising exactly the amount that they want to purchase at, the price they're paying, and the date. So market makers find this very easy, if you will, to flush out these positions. So you have to understand that's part of what you're doing with these and kind of play within those rules. So just a note to new traders. So moving on, we've got polymarket bets. Speaking of bets, they are talking about a 51% chance, which really is quite level about Bitcoin and cryptocurrencies going down further. But they are also open to bets as far as what is happening with the markets. Now, one thing I don't need Polymarket to tell you is that inflation is definitely going to continue. Doesn't matter even if the Fed tightens, which would be a mistake at this point in time now. Waller came out this morning. I think he is the prime pick for the replacement for Jerome Powell, is talking about the further cuts, saying that they are likely to cut because they're looking at the jobs market and seeing quite a bit of weakness. Now, this morning, we're watching with all these negotiations and what's going on. Defense or war stocks still doing well. They came out with earnings, and no surprise, with all of these government um, contracts that they've got, they're still doing very well. So prior to this meeting next week, Trump made a deal with Australia about the rare earth minerals. They are the number 4 holder in the world. So trying to get a little bit of leverage before he goes and speaks with him. Now, we had the issue the past few days, it's been back on the small regional banks. We've been talking about this for a while, that there's got to be quite a few more mergers and failures of these banks. Now, JP Morgan is downgrading now not just the small banks, but Goldman, and saying that there's a lot of bank valuations much too high versus what this is European counterparts, but it's across the sector as a whole. Now, the calendar, we've only got Waller coming out with open remarks. We are expecting him to be very dovish, talking about rate cuts. Don't expect anything different. It's going to be what he says about the job market, if anything, that will move it. Now, Fed Governor Michael Barr tomorrow. Thursday is when we're supposed to be getting anything really significant. Now, we're subject to headline news today, and Waller is expected to be dovish, so that would be a boost to the stock market because the dollar right now is strengthening a bit. So Thursday, jobless claims what they're looking at, and CPI, which we're not getting a lot of data, but as it says, it will be published because they're going to use this to determine Social Security COLA. That stands for cost of living adjustment. So, in short, what this is supposed to do is supposed to offset inflation for senior citizens that are on this. In short, it is the government program. So between this, they want to shove everybody else on this, going to use CPI, but this COLA and the CPI, of course, are not going to keep up with inflation. Now, we had Zions Bank this morning. Spiked yesterday was the kind of focus of trouble, and then talking about these small banks. We've got more of that incoming. Now, in the real economy, what is going on? We've got the quote unquote decision makers. Now, these are all the politicians and such. Wall Street and Main Street are not the same. So these decision makers disconnected with what is actually going on with the ground economy. And what's going on with a lot of these reports is they are a broad spectrum. So they're taking from both sides. But what we've got right now is a K-shaped economy, and it is moving faster in this direction. We're going to have the haves and the have-nots. And so this is quite distinctly split now. We've got an upper 10% that are still spending upper class. We've got the lower 10%, which are struggling and on government assistance. And then we've got the middle class in between those. The middle class is really the sector that moves spending because they make decisions and change their spending habits. So they are the movers of the true economy. So, with this, these individual components of what is going on is more important than looking overall, because this upper 10% and lower 10% kind of cancel each other out, but they're also kind of blurring what is going on with this middle class. So, what you're looking at, they're talking about the models breakdown. What they mean is savings versus interest rates, and whether they're going to put where they're putting their capital, in short, where they're putting their money. So upper 10%, lower 10% spend no matter what, because the upper 10%'s got money and the lower 10% has bad habits. So between the two, it is the middle that is making this shift that's going on that we're seeing. So it's a little different concept of what we've got in the real economy going forward. Now, the problem with this is the lower 10% is used to being poor and having to scale back with the purchase. The upper 10% now is more nervous, looking at inflation and jobs, and they're beginning to cut back on their services as well. And the big problem is they do not understand and have never had to prepare for a downgrade of a serious nature for an extended period of time. So rich people don't know how to kind of manage in difficult times. So going forward, that could be an issue. Now I've got a little example here. Elon Musk posting his pet dog Floki on X. This caused the meme coin to pump 29%. Now, this is two problems here. First is those that have all of the money, they can put it there because it doesn't matter if they lose it anyway, or the lower class, which is gambling and trying to make up some larger gains. Now, wanted to talk about Amazon Web Services. It's all over the internet. They went down, but they took down half the internet. One company. That is a problem, but that also shows the focus of where it's concentrated. And it's not just web services. What I want to point out is how much they own and how they are a driver of the class. Now, not too many years ago, it was a big drive in housing to have McMansions. Everyone was after upscaling, and now everyone is looking at what they call tiny homes, and Amazon is selling these online, $19,000. So it's showing a massive shift in what is looking forward. Now, we know all of this is to drive toward e currency, if you will, CBDC or stablecoin, doesn't matter what you call it. But we've got BRIC states now converting dollar debt to yuan, so going to China instead of the US dollar stablecoins. And it's Ethiopia, but we're going to see this heading increasing and going forward. So, in an interesting turn of events, China is now accusing the United States of a major cyber attack. This is going back and forth, and we're going to see more of this. And this is going to be calls to lock down security more towards the digital ID and an advancement of the control that it will take for all of these. Now, going back to the CBDC, we'll call it a stable coin for this one, but they're calling it out. They really are central business digital currencies. Central banking is really what it is. Corporatocracy, that's what all this is put forward, because the decisions are made by those higher than what they're saying as far as politicians. They are driven by those that are getting all of the movements, and they are told what to do. Now, some of you shift off this a little bit. A company called OpenSea. Now, they were famous a while back for NFTs, major trading platform. But I brought this up before. They're looking to evolve to trade everything. So again, we're tokenizing everything, and it will all be traded on blockchains. So with this, we're going to shift a little bit forward off of the control, but I want to keep an eye out for this. I think this very small story that needs attention. Witkoff and Kushner uh, arrived in Israel to shore up the Gaza ceasefire. Now, there's some very famous background kind of prophecy, if you will, about those that drive the peace accords. So I just thought I'd bring this up because there's some very interesting dialogue going on with that. Now, a couple of things that frighten me, I want to bring this up. This came off of the web, and this is a study of where artificial intelligence gets its facts, over 40% from Reddit. And then shortly after that is Wikipedia and YouTube. So to me, this is serious trouble, that this is where the truth, air quotes, truth, is being pulled from. So the problem with this is once AI pulls this, people are pulling AI to use that, and it's becoming circular for the knowledge, and that is going to, in short, magnify errors. So there's a distinct problem behind this with as far as what data has been distorted for some time now, since C19. Now, we've got decentralized science bringing the brain on chain. This is where it's going to merge with AI. And we've got a prime example here of going forward. We've got billionaire investor Ray Dalio. He has created an AI clone for himself, says that he can have unlimited conversations, and this is designed to replicate his thinking and decision making style. So, moving forward, we're going to see a lot more of this cloning to the future, and then it's going to advance as far as personalities. So, where this is headed, this is great. I think the more individuals that could do this, probably to put into this pool, could offset everything pulling off of social media. So, with all of this, wish you a wonderful trading day. We are going to be heading into extremely volatile the next couple of days for what's going on with the trading. So, urging caution, don't get chopped up. And until I see you again, my friends, resist.